Welcome back, folks. I am Jon Najarian, and I'm joining you on the 20th of May, 2022. This is going to be a presentation primarily about unusual option activity. I say primarily because we're actually up here in Minnesota for a memorial for my father, who passed almost 2 years ago, but because of COVID, you couldn't have in person and so forth. So now a bunch of surgeons are in town, nurses, surgical nurses, researchers, clinicians up in Minnesota paying tribute to my dad, and it's a wonderful time. So this is, in fact, that was a symposium for my father, the Jon S. Najarian Symposium, a tribute to leadership and innovation, because clearly he was an innovator. He did multiple either firsts for instance, a liver transplant on a kid under a year old. That would be Jamie Fisk. He did a number of breakthrough transplants in islets for pancreas and full pancreas transplants, and changed the way that people do both kidney and liver transplants. Anyway, fabulous time up here. Got to see a whole bunch of great doctors that trained under my father, worked with him, and it was a great time. Truly blessed to be there for that. But you tuned in, I'm guessing, for 3 at 3. So without further ado, let's take a look at this, because just 2 days ago, we talked about the QQQs and that unusual put activity. There you see the tweet. If you go to Market Rebellion or Market Rebels on Twitter, you will see that actual full video for 3 at 3 on the 18th of May, obviously 2 days ago. There I took a picture of a screenshot, if you will, of the 30,000 30th of June 270 puts that were purchased. So they were $22, almost $23 out of the money. Where did the index move over the next 2 days? Well, it's dropped by over 10 points. The QQQs just a little bit ago, as of 2:45 Eastern time today, were 280.206. So they'd fallen by more than 10 points. Let's call it 11 points right here. And the put spreads that we put on, bang, making bank in those. So truly appreciate that, just like I truly appreciate all of you. This is a great new partnership that we have with Clicks TV. This is a streamer. It's CLIXTV.com. Now, they are a streaming source for news and information, and they break it down into like 5 or 6 minute clips. And they are one of the leading streamers. In fact, when we launched some of our stuff on there just this week, they got that day over 172 million downloads. I know that sounds like a lot. It does have global reach. Stacy and a bunch of the folks that are behind this were high-level people at CNN when Ted Turner had CNN back when it was a news station, before it became just political. Maybe it's going back towards just news. We'll see. But nonetheless, very happy that MasterCard has sponsored some of our first broadcasts on Clicks. Can't be happier about that. There's Pete, myself, and our friend and business partner, Mark Lopresti. All right, I know you needed to see this, folks, which is the OCC, because what I've been saying is we haven't hit a capitulation bottom yet. And one of the things I told you that I've been looking for is a big surge in volume. I think I can point to that by showing you also the opposite, because there's Monday. You recall we had a really big rally Monday, and then we just fell out of bed the rest of the week. Well, Monday, we only traded, take a look at the big red arrow there, 34 million option contracts. Normal is 41, almost 42 million. So we're 19% under that on Monday. Does that sound like we were close to a capitulation? Not to me, it doesn't. To me, that says there weren't any real buyers. There was short covering and very little real buying on a big up day in the market. So what I'm looking for is, since the yearly average is 41.9, the monthly average is 41.5, we need to be over average on a day when we see capitulation. Is it written in stone? Of course not. Nothing is. But I'm saying history has shown time and time again that I need to see a surge in volatility and a surge in volume to pick bottoms or tradable levels for more than just a day. And we have not seen that yet, I'm sorry to say, for all of you bulls out there. And I do count myself among you, by the way, most days. But you got to trade the market you got, not the one you want. This, by the way, is one of those interviews on Clicks TV. It's my crypto convo with none other than Russell Starr. Russell is the head of DeFi Tech. It is a fabulous company, and I think you'll really enjoy the clips that we've put together from that interview. Again, in short, digestible bites on Clicks TV. Most of them are 5 minutes or less. Crypto convo with me, Jon Najarian, and leaders, of course, in crypto. All right, take a look at this one, because it's a big one. The first one that we are looking at here, 34,700. That's nearly 3.5 million share equivalent of the June 166 puts. These are puts that are about $7 out of the money. And the IWM, you may recall, I have had unusual activity in this since it was 210, 200, 195, 190, and so forth and so on. I mean, go see some of the old episodes of 3 at 3. This has been one of the standout trades when people really want protection, or whether they want to just bet against the market, they go into this, the IWM. And regular June, so approximately 4 weeks into the future, since today is regular May expiration, approximately 4 weeks into the future, 3.5 million share equivalent, because that's what 34,700 puts would be controlling, 3.47 million shares short. First of today's 3 at 3. Second, TLT. It has been making a nice bounce. Why is that? Well, because people believe that the more bad news that comes out, like Ross Stores, like Target, and so forth, like Walmart, the more of that bad news that comes out, the less likely it is that the Fed sticks to their path, because that medicine is so harsh. I mean, and speaking of my father, he used to always say, John, we can kill cancer. Problem is, we don't know if we'll kill you. So some people survive chemo and so forth. Some people do not. Obviously, a majority do survive chemo, but end up succumbing to the disease nonetheless, and or the damage done by the chemotherapy and or the radiation. So the same thing here. Is the Fed so damned and determined to kill or pare back the inflation that we're all experiencing right now, that they go whole hog at it and end up tearing apart the market and sending us into a recession? And I'm not talking about the stock market, but the stock market is a measurement that some of us use, but obviously the stock market does not describe the economy the way it used to, because of the way the companies that make up the stock market, most of those companies in the S&P 500, certainly a lot of those companies in the Dow Jones, no longer just represent the economy. All right, TLT, the 3rd of June, next Friday, 120 calls, because maybe the Fed starts talking a little more about taking their foot off the brake a little bit, tapping it instead of stomping on it. That's what this bet may indeed be. 770,000 share equivalent of those June 120 calls. Third and final of today's 3 at 3, SPY. More bearish activity. I've talked about it. I've shown you at the beginning, of course, I started off with the QQQ. Now you're seeing S&P 500, 20,000 of the regular June 368 puts. These are almost $20 out of the money. $20 isn't even a big move really in the SPY, of course, because a 10% move would be 38 points, 385 point index, 38 points would be 10%. This is not a 38 point, but this certainly is a 5% plus downside protection or bet that we go down, one or the other. Doesn't mean they'll be right, but when somebody's putting 20,000 calls on the line for a 4-week out put, I pay attention. I roll my protection down as well, which I have done. But as you know, I don't roll them down to those 368 puts. I roll them down to at the money, the 385 puts, and I am selling lower strikes against it. Always keep in mind that any of these options that are 6 weeks before expiration or less have rapid time decay, theta. So you need to address that in what the best way you know how. How do I do it? I will sell a lower strike put against the put that I own, creating a spread that I'll make the differential between these two strike prices, hopefully between 385 and 375, 10 points. And I'll be able to make the difference between what I paid for the spread and what the spread could go to, not what it's guaranteed to go to. All right, that's going to do it for us here today, folks. I appreciate you dialing in. I hope those of you who need to learn more and would like to do so in person will consider RebelCon 2022. RebelCon is our big conference. It will be in Dallas, Texas. marketrebellion.com/Dallas is how you learn all about it. Speakers, special events like barbecue, golf outing, hole-in-one competition, armadillo races. Yeah, that's the fun stuff. Also have more live trading than we've ever had at any conference in the past. That's RebelCon 2022. Check it out, marketrebellion.com/Dallas. You will be a better, smarter investor, able to limit risk that you take and get a leveraged return if you apply the strategies that we can teach you. Check it out, RebelCon 2022, marketrebellion.com/Dallas. That's going to do it for me, folks. Have a great weekend. And I will be back here Monday to say, let's go. Let's get ready. Let's get some.